Question 1. An insurance underwriter at Keystone Mutual reviews an application submitted by Ista Jameson, a small business owner in Topeka who is seeking commercial property insurance for a bakery located in a high-crime area. The bakery has suffered 2 prior thefts in the last 14 months, and Ista Jameson has declined to install a security system despite recommendations from a previous carrier. The insurer's actuarial models project higher than average losses for similar businesses in this location, yet Ista Jameson is aggressively pursuing policy with high limits and no deductible. What underwriting concern does this situation most clearly represent? A. Risk pooling. B. Adverse selection. C. Insurable interest. D. Law of large numbers. Answer. Correct answer. B. Adverse selection. Explanation. This is a classic case of adverse selection, which occurs when individuals with higher risk levels are more likely to seek insurance, while those with low risks opt out. Ista Jameson has a history of claims and continues operating in a high-risk zone without implementing risk mitigation like installing a security system. Kansas insurers are particularly wary of such clients because if accepted without proper premium adjustment, it may distort the insurer's loss ratios. According to Kansas insurance regulations and NAIC model laws, insurers are allowed to use location-based risk and claims history underwriting decisions. The law of large numbers, D, helps predict losses in aggregate but doesn't address individual behavior. Insurable interest, C, is unrelated since he owns the bakery. Risk pooling, A, is broader concept and doesn't capture the problem here. Question 2. Which of the following best reflects why a commercial insurance policy is considered a contract of adhesion? A. Because both parties must negotiate and agree to the premium amount. B. Because only the insurer is bound to the policy terms. C. Because the insured must accept the contract as written without bargaining power. D. Because it requires equal exchange of value, premiums for benefits. Answer. Correct answer, C, because the insured must accept the contract as written without bargaining power. Explanation. Insurance policies are considered contracts of adhesion, meaning they are written exclusively by one party, and the insured has little to no opportunity to negotiate the terms. Courts typically interpret any ambiguities in favor of the insured because of this imbalance. This principle is recognized in Kansas contract law and under insurance doctrine. Option A is incorrect because premiums are set by the insurer's underwriting guidelines. B is wrong since both parties are bound that the insurer's obligation is often triggered only by covered event. D confuses adhesion with consideration. Different contractual element. Question 3. Is Dana Lopez owns a graphic design firm in Wichita. A fire damages the office, rendering it unusable for 3 months. Fortunately, she has business income coverage as part of her commercial property policy. During the restoration period, Lopez rents a temporary location and continues operating with reduced capacity. She incurs expenses to expedite the delivery of replacement computers. Which portion of her policy is most likely to cover the increased cost of expediting operations to reduce downtime? A. Civil authority coverage. B. Extra expense coverage. C. Business personal property coverage. D. Extended business income coverage. Answer. Correct answer. B. Extra expense coverage. Explanation. Extra expense coverage reimburses necessary expenses the insured incurs during the restoration period to avoid or minimize the suspension of operations, such as renting temporary space or expediting delivery of critical equipment. This complements business income coverage, which covers loss of net income. In Kansas, insurers offering CP030 business income including expense coverage must adhere to ISO definitions. Civil authority A applies only if government prohibits access. Business personal property C addresses physical items, not operational continuity. Extended business income D applies after the restoration period ends. Question 4. A printing company in Salina receives a claim payment from its insurer after a neighboring building caused water damage due to faulty plumbing. The insurer pays the claim under the building coverage form. Later, the insurer sues the negligent neighbor's contractor to recover the amount paid. What legal principle allows the insurer to pursue this recovery? A. Indemnity. B. Coinsurance. C. Subrogation. D. Contribution. Answer. Correct answer. C. Subrogation. Explanation. Subrogation allows an insurer to step into the insured's legal rights to recover from third party after paying claim. It reinforces the principle of indemnity, ensuring the insured doesn't profit by collecting twice, once from the insurer, once from the at-fault party. Under Kansas statutes annotated KSA 402103, insurers are permitted to pursue third-party recovery post-payment. Indemnity A is the goal, not the mechanism. Coinsurance B pertains to valuation and sharing of losses. Contribution D applies when multiple insurers cover the same loss. Question 5. Mr. Carlyle, a warehouse manager, suffers a back injury while lifting a heavy box. He files a claim under his employer's workers' compensation insurance and receives benefits. He then attempts to sue his employer for additional damages, citing lack of adequate lifting equipment. Why will Mr. Carlyle's lawsuit likely be dismissed? A. Because he failed to prove negligence. B. Because his injury occurred during break. C. Because of the exclusive remedy doctrine. D. Because the statute of limitations expired. Answer. Correct answer C. Because of the exclusive remedy doctrine. Explanation. The exclusive remedy doctrine, foundational to workers' compensation laws, prevents employees from suing their employer for injuries covered by the system even if the employer was negligent. In Kansas, this doctrine is codified under KSA 44501, which states that compensation provided by the employer's insurance is the employee's sole remedy. Option A is irrelevant in workers' compensation, which is no fault. B is not stated in the facts, and D lacks legal foundation in this context. Question 6. Which of the following would best be categorized as an indirect loss under a commercial property policy? A. A customer's vehicle damaged by collapsing roof. B. Inventory destroyed by fire. C. Loss of income due to temporary business closure after fire. D. Office equipment stolen during break-in. Answer. Correct answer C. Loss of income due to temporary business closure after a fire. Explanation. Indirect or consequential losses are financial losses that result from direct physical damage. Business interruption, extra expenses, and loss of rental income fall under this category. Direct losses, such as fire or theft damage, are addressed under standard building and personal property coverage forms. Kansas insurers differentiate these per ISO forms CP 030 indirect versus CP 010 direct. A, B, and D all describe direct physical damage. Question 7. Which of the following symbols in a commercial auto policy provides the broadest liability coverage? A. Symbol 7. Specifically described autos. B. Symbol 1. Any auto. C. Symbol 8. Hired autos. D. Symbol 9. Non-owned autos. Answer. Correct answer B. Symbol 1. Any auto. Explanation. Symbol 1. Any auto provides the broadest liability coverage applying to owned, hired, borrowed, and non-owned vehicles. It is often used for businesses with large or unpredictable vehicle exposures. Kansas commercial auto insurers using ISO Form 01 recognize Symbol 1 as offering all-inclusive liability. Symbol 7 only covers specifically listed autos. Symbol 8 and 9 apply to hired or non-owned vehicles respectively, but not owned autos. Question 8. Which type of insurer operates as a non-incorporated association of individuals who join together to pool risks, often for unique or hard-to-insure exposures? A. Mutual insurance company. B. Stock insurance company. C. Lloyd's Association. D. Fraternal Benefit Society. Answer. Correct answer C. Lloyd's Association. Explanation. Lloyd's associations are not insurance companies but are syndicates of underwriters who pool resources to cover specialized or high-risk exposures. While not common in Kansas, such arrangements may be recognized for unique commercial exposures. This model originated with Lloyd's of London. In contrast, Mutual A and stock companies B are incorporated insurers. Fraternal Society D are member-based and typically write life or health coverage. Question 9. A manufacturing plant in Overland Park has equipment breakdown coverage under a boiler and machinery policy. A sudden mechanical failure of a production compressor halts operations. Which of the following would most likely be covered under this policy? A. Loss of market share due to production delays. B. Physical damage to the compressor from internal pressure. C. Fire damage caused by lightning. D. Employee injuries during the incident. Answer. Correct answer B. Physical damage to the compressor from internal pressure. Explanation: equipment breakdown insurance, formerly boiler and machinery, covers accidental mechanical breakdown, including steam explosions or pressure vessel failures. In Kansas, coverage is typically written under ISO Form EB 020. A is an economic consequence not covered. C is covered under commercial property. D is handled by workers' compensation, not this policy. Question 10. Which of the following statements best defines the purpose of an endorsement in a commercial insurance policy? A. It provides a separate policy for a different line of coverage. B. It modifies the standard policy language to tailor coverage. C. It creates a deductible requirement. D. It changes the policy's expiration date. Answer. Correct answer. B. It modifies the standard policy language to tailor coverage. Explanation: endorsements are formal additions or changes to the base policy used to expand, limit, or clarify coverage. For example, adding hired and non-owned auto liability or removing coverage for specific perils. According to Kansas Insurance Department filing requirements, endorsements must be filed and approved if altering standard forms. A describes a different policy. C and D may result from endorsements but are not their primary function. Question 11. Mr. Blake, owner of a Kansas auto repair shop, files a claim after flood damages his business equipment. His insurer pays the claim for the damaged equipment but refuses to pay for a new piece of equipment priced above the depreciated value of the damaged one. Mr. Blake argues that the insurer should cover the full replacement cost. What principle justifies the insurer's payment based on depreciated value rather than replacement cost? A. Indemnity. B. Subrogation. C. Adverse selection. D. Coinsurance. Answer. Correct answer. A. Indemnity. Explanation: the principle of indemnity means the insured should be restored to the financial position they were in before the loss without profiting from insurance. Paying only the actual cash value, a CV, which accounts for depreciation, aligns with this principle. In Kansas, commercial property policies often include replacement cost endorsements for full replacement cost coverage. Absent that, the CV applies. Subrogation. B. Relates to recovery from third parties. Adverse selection. C. Involves risk selection. And coinsurance. D. Is about sharing risk when underinsured. Question 12. Is Patel an independent insurance agent representing multiple insurers? She collects premiums from clients but delays forwarding those premiums to the insurer. A client's policy lapses due to non-payment by the insurer. Which of the following best describes is Patel's legal obligation that has been violated? A. Apparent authority. B. Fiduciary duty. C. Implied authority. D. Warranty. Answer. Correct answer. B. Fiduciary duty. Explanation: fiduciary duty requires agents to handle clients' funds like premiums responsibly and promptly. Holding premiums without forwarding constitutes a breach. This duty is a legal and ethical standard in Kansas, with statutes requiring timely remittance of premiums to insurers to protect insureds and insurers alike. Apparent authority A and implied authority C relate to agents, bind insurers, but don't address fiduciary responsibilities. Warranty D is policy term regarding statements. Question 13. Bassey Manufacturing has a deal policy with a claims-made form. A liability incident happened in March 2024, but was not reported until January 2025 after the policy expired. The company requests coverage under the expired policy. What will most likely be the insurer's response regarding coverage? A. The claim will be covered because the incident occurred during the policy period. B. The claim will be denied because it was reported after the policy expired. C. The claim will be covered if the insured purchases tail endorsement. D. The claim will be denied because the injury was not bodily injury. Answer. Correct answer. B. The claim will be denied because it was reported after the policy expired. Explanation: claims-made policies require both the incident and claim reporting to occur during the policy period or within any extended reporting period. Late reporting typically voids coverage. Kansas insurance law and policy forms ICG-01 specify this requirement clearly, while tail endorsements C can extend reporting. No indication exists that it was purchased here. A. Applies to occurrence forms, not claims made. D. Is unrelated to the facts. Question 14. Eastern Ewan applies for commercial auto insurance on Monday. The agent provides a binder allowing immediate coverage, but the insurer doesn't issue the policy until Friday. During this period, Eastern Ewan's vehicle is involved in an accident. What is the legal status of coverage during the binder period? A. There is no coverage until the policy is issued. B. The binder provides temporary coverage binding the insurer. C. Coverage depends on whether the accident is reported immediately. D. Coverage is only effective if the insurer approves the risk in writing. Answer. Correct answer. B. The binder provides temporary coverage binding the insurer. Explanation. A binder is a temporary legally binding contract issued by an agent or insurer that provides immediate coverage until the formal policy is issued. Kansas recognizes binders as valid evidence of coverage, protecting the insured in the interim. A. Ignores the legal effect of binders. C and D. Misunderstand binder operation. Binders protect insureds and insurers, ensuring no gap in coverage during underwriting. Question 15. A Kansas construction company wants coverage for tools and equipment used on various job sites. The insurer recommends a commercial inland marine policy instead of a traditional commercial property policy. Why is this policy type more appropriate? A. Because it covers only damage caused by fire. B. Because it covers property in transit and in different locations. C. Because it excludes theft coverage. D. Because it requires no deductible. Answer. Correct answer. B. Because it covers property in transit and at different locations. Explanation. Commercial inland marine insurance covers property that is mobile or in transit, such as contractors' equipment, tools, and goods transported over land. This flexibility is essential for construction companies working at multiple sites. Kansas insurers use inland marine policies e.g. Nationwide's contractors' equipment form to fill gaps left. Fixed location property policies A and C are false. Perils covered vary. D is policy term, not defining feature. Question 16. During a commercial policy application, Mr. Santos states that his business is located in a low-risk flood zone. However, a later claim reveals the location is actually in a designated floodplain. Why might this statement be considered a representation rather than a warranty? A. Because it is a guaranteed fact forming the basis of the contract. B. Because it is a belief or statement made to the best of the applicant's knowledge. C. Because the insurer explicitly requires it in writing. D. Because it has no effect on the insurer's decision. Answer. Correct answer. B. Because it is a belief or statement made to the best of the applicant's knowledge. Explanation. Representation is statement believed to be true at the time of application but is not guaranteed. If it's false, the insurer must prove it was material and relied upon to deny coverage. Warranty A is an absolute guarantee, breach of which may void coverage regardless of materiality. Kansas courts generally treat most applicant statements as representations to protect insureds from unintentional errors. C and D. Misunderstand these legal concepts. Question 17. Dyes Corp's commercial property policy excludes coverage for losses caused by wear and tear. Roof collapses after years of inadequate maintenance, resulting in significant damage. Which of the following best describes how this exclusion affects the claim? A. The insurer must pay because the roof physically collapsed. B. The insurer will deny coverage because the collapse resulted from an excluded cause. C. The claim is partially covered under extra expense coverage. D. The insurer must cover the claim under an implied warranty of habitability. Answer. Correct answer. B. The insurer will deny coverage because the collapse resulted from an excluded cause. Explanation. Wear and tear exclusions are standard in commercial property policies, disallowing coverage for losses resulting from deterioration or lack of maintenance. Kansas courts uphold such exclusions, emphasizing that insurance is not a maintenance contract. A. Ignores the cause. C. Misapplies coverage. And D. Is unrelated to commercial property law. Question 18. A Kansas retail company discovers that an employee has been embezzling funds over several months. The company files a claim under its commercial crime policy with employee dishonesty coverage. What condition must typically be met for the claim to be covered? A. The employee must have physical custody of insured property. B. The employee must confess in writing before coverage applies. C. The employer must have conducted a background check before hiring. D. The crime must be reported to law enforcement immediately. Answer. Correct answer. A. The employee must have physical custody of insured property. Explanation. Commercial crime policies covering employee dishonesty generally require that the dishonest acts involve physical possession or custody of money or property insured under the policy. Kansas insurers follow ISO crime form guidelines, which require proof of direct loss caused by an employee with access. B, C, and D are common business practices but not policy conditions for coverage. Question 19. An insurer writes commercial property policies across Kansas and uses the law of large numbers to predict losses. If the insurer only insures 5 large manufacturing plants instead of 5,000 smaller businesses, what impact will this have on the insurer's risk and premium accuracy? A. The insurer's loss predictions will be more accurate. B. The insurer's risk will be higher due to less diversified exposure. C. The law of large numbers does not apply to commercial insurance. D. Premiums will be lower due to concentration of risk. Answer. Correct answer. B. The insurer's risk will be higher due to less diversified exposure. Explanation. The law of large numbers states that as the number of similar exposure units increases, the insurer's predictions of losses become more accurate. Insuring only few large risks reduces diversification and increases volatility and uncertainty. Kansas insurers therefore seek broad, diversified portfolios to stabilize loss ratios. A is false, C ignores fundamental actuarial principles, and D misunderstands risk-based pricing. Question 20. As Taurus, an underwriter at a Kansas insurance company, receives an application for commercial liability insurance from a new chemical manufacturing plant. The plant uses hazardous substances and has a history of regulatory violations. Taurus must decide whether to accept, modify, or reject the risk. Which of the following steps is most critical for Taurus to take before making a final underwriting decision? A. Immediately reject the application due to hazardous materials. B. Evaluate the applicant's loss history, regulatory compliance, and risk controls. C. Approve the application to gain market share. D. Increase the premium without further investigation. Answer. Correct answer. B. Evaluate the applicant's loss history, regulatory compliance, and risk controls. Explanation. The underwriting process involves thorough risk assessment including loss history, regulatory compliance, and mitigation efforts. Simply rejecting A or approving C without analysis can lead to poor risk management. Increasing premiums arbitrarily D may not be justified. Kansas underwriting guidelines aim for comprehensive risk evaluation to maintain portfolio quality and regulatory compliance. Question 21. A Kansas trucking company operates interstate routes and wants coverage for liability arising out of accidents involving its vehicles hauling goods for hire. Which of the following is a key federal requirement the insurer must consider when underwriting this risk? A. The Motor Carrier Act requiring minimum liability limits based on cargo type. B. The Kansas Automobile Insurance Act's mandatory uninsured motorist coverage. C. The Commercial Crime Insurance Act regulating cargo theft coverage. D. The Boiler and Machinery Act for equipment breakdown. Answer. Correct answer. A. The Motor Carrier Act requiring minimum liability limits based on cargo type. Explanation. The Federal Motor Carrier Safety Act and related regulations mandate minimum liability coverage amounts for interstate carriers varying by cargo type. G. Hazardous materials. Kansas insurers must ensure compliance with federal law when underwriting motor carrier policies. Options B, C, and D pertain to unrelated insurance coverages. Question 22. A Kansas insurer, after initially denying a claim for late notice, later processes the claim without objection. The insured wonders if the denial was valid. What legal doctrine might prevent the insurer from denying the claim now? A. Waiver and estoppel. B. Subrogation. C. Adverse selection. D. Coinsurance. Answer. Correct answer. A. Waiver and estoppel. Explanation. Waiver and estoppel prevent an insurer from enforcing a policy provision like timely notice if it previously ignored the breach and acted as if coverage applied. Kansas courts recognize this principle to promote fairness and reliance interests. Subrogation. B. Concerns recovery rights. Adverse selection. C. Relates to underwriting. Coinsurance. D. Concerns loss valuation. Question 23. Mr. Reynolds files a claim under his commercial property policy but fails to notify the insurer within the time frame required by the policy conditions. The insurer denies the claim on this basis. Which of the following best describes the legal rationale for the insurer's action? A. Conditions are optional provisions that insurers may waive. B. Conditions impose duties on the insured to facilitate claims handling. C. Conditions extend coverage beyond the policy limits. D. Conditions are irrelevant if the loss is covered. Answer. Correct answer. B. Conditions impose duties on the insured to facilitate claims handling. Explanation. Policy conditions are contractual duties the insured must meet, such as prompt notice, proof of loss, and cooperation. Failure to comply can justify claim denial under Kansas law, ensuring insurers can investigate and mitigate losses. Conditions are binding, not optional. A. They don't extend coverage. C. Nor are they relevant. D. Question 24. Mr. Collins owns a large manufacturing facility exceeding 100,000 square feet and employs 150 people. He wants to purchase a business owner's policy for his business. What is the most likely outcome regarding his eligibility for standard BOP in Kansas? A. He is eligible because all commercial businesses qualify. B. He is ineligible due to size and employee count exceeding BOP limits. C. He is eligible only if he agrees to higher deductibles. D. He can qualify if he excludes liability coverage. Answer. Correct answer. B. He is ineligible due to size and employee count exceeding BOP limits. Explanation. BOPs are designed for small to medium-sized businesses and typically impose size limits, usually under 350,050 SQ, or employee limits, generally under 100. Mr. Collins' facility and workforce exceed typical eligibility criteria, making him ineligible for standard BOP in Kansas. Larger firms require separate property and liability policies. Options A, C, and D are incorrect. Question 25. A subcontractor working on a Kansas commercial construction project requests to be named as an additional insured on the contractor's general liability policy. What is the primary purpose of adding the subcontractor as an additional insured? A. To provide primary coverage for the subcontractor's own negligence. B. To extend the contractor's policy coverage to protect the subcontractor for liability arising from the contractor's operations. C. To eliminate the subcontractor's need for their own insurance. D. To increase the contractor's policy limits. Answer. Correct answer. B. To extend the contractor's policy coverage to protect the subcontractor for liability arising from the contractor's operations. Explanation. Adding subcontractor as an additional insured typically provides them coverage for liability arising out of the named insured's operations, protecting them from lawsuits related to work performed under contract. It does not provide coverage for the subcontractor's sole negligence. A. It does not replace subcontractor's own insurance. C. Nor does it increase policy limits. D. Question 26. A commercial bakery's oven suffers sudden mechanical failure, causing it to stop working and resulting in spoilage of dough in process. Which loss is typically covered under an equipment breakdown policy? A. Spoilage of the dough only. B. Physical damage to the oven and spoilage resulting directly from the breakdown. C. Lost profits from delayed orders. D. Damage caused by power outage unrelated to the oven failure. Answer. Correct answer. B. Physical damage to the oven and spoilage resulting directly from the breakdown. Explanation. Equipment breakdown policies cover the physical damage to covered equipment and resulting spoilage or loss of property directly caused by the breakdown. Lost profits, C, may be covered under business income endorsements but are not automatic. Damage from unrelated power outages, D, is excluded. Spoilage alone, A, without physical damage typically is not covered. Question 27. A Kansas business purchases a commercial crime policy. The policy is a discovery form rather than a loss-sustained form. What is the main difference in coverage between these two forms? A discovery form covers losses discovered during the policy period regardless of when the act occurred. B. Loss-sustained form covers losses discovered after the policy period. C. Discovery form requires losses to occur during the policy period. D. Both forms cover the same risks with different premiums. Answer. Correct answer. A discovery form covers losses discovered during the policy period regardless of when the act occurred. Explanation. Discovery form provides coverage for losses discovered during the policy period even if the dishonest act occurred earlier, offering broader protection. Loss sustained form only covers losses that actually occurred during the policy period. Kansas insurers often offer both options depending on risk preferences. Options B, C, and D mistake key distinctions. Question 20. A Kansas manufacturing company's CGL policy has $1 million per occurrence limit and $2 million aggregate limit. Two separate accidents cause $1.5 million each in damages during the policy year. How much will the insurer pay for the total damages? A. $2 million. B. $3 million. C. $1 million. D. $0.5 million. Answer. Correct answer. A. $2 million. Explanation. The insurer pays up to the per-occurrence limit $1 million for each accident, but total payments during the policy year cannot exceed the aggregate limit, $2 million. Here, two accidents cause $3 million in damages, but the insurer's maximum payment is capped at $2 million. Kansas courts enforce these limits per policy terms. Options B, C, and D incorrectly apply limits. Question 29. A Kansas retail store purchases an employee dishonesty crime policy with a $100,000 limit per employee and a $500,000 aggregate limit. Two employees embezzle $150,000 and $120,000 respectively. What is the insurer's maximum total payment under the policy? A. $270,000. B. $220,000. C. $200,000. D. $500,000. Answer. Correct answer. C. $200,000. Explanation. The policy pays up to $100,000 per employee due to per employee limits, so only $100,000 of each loss is covered, totaling $200,000. The aggregate limit, $500,000, is not reached. Kansas insurers enforce these per employee limits strictly. Options A, B, and D incorrectly sum losses or assume full aggregate coverage. Question 30. Which of the following perils is typically excluded under a standard commercial property policy unless added by endorsement? A. Fire. B. Theft. C. Earthquake. D. Vandalism. Answer. Correct answer. C. Earthquake. Explanation. Earthquake coverage is typically excluded from standard commercial property policies and must be added through an endorsement or a separate policy.